Corporate America may be getting closer to embracing Bitcoin. Sources tell CNBC the big banks have been feeling internal pressure to adopt the cryptocurrency. This comes after Tesla, MasterCard, and BNY Mellon all announced various programs involving Bitcoin this week. Not all CEOs, though, are ready to accept Bitcoin with open arms. Here's Affirm's CEO, Max Levchin, on CNBC earlier today.
First of all, I think I'm a known crypto skeptic, so I'm always very careful. That said, it is incredible how Bitcoin and all the cryptocurrencies have grown. And I think at some point, skeptic or not, you have to listen to the markets. If you have an asset that's growing in value as fast as Bitcoin is, I'm not sure people actually want to spend it. But if it becomes a medium of exchange that folks want to actually use to buy their Pelotons and their sporting goods and their outdoor, we will have to consider it.
Joining us now, Meltem, Demirors, Chief Strategy Officer at CoinShares. A very good afternoon to you. Thanks so much for joining us. Let's pick up, first of all, on the sort of final point there that Max was talking about. How far away are we from Bitcoin actually being used to make transactions for products, it becoming a genuine currency of exchange?
Great to be here. I can't believe it's the end of another week. I'm happy that markets close at 4. Crypto markets don't close. So sadly, I've got a whole weekend of this ahead. But look, I think Max Levchin's comments are spot on. Historically, a lot of the engagement around Bitcoin has been really more around the store of value narrative and people buying it as an investment asset as opposed to a functional medium of exchange. But that's starting to change and really rapidly. On a daily basis, there are over 1 million active Bitcoin wallets on the Bitcoin network. Now, a lot of them are transacting on trading platforms and other sorts of applications more related to financial use cases. But with the advent of the Lightning Network, which is a payment network built on top of Bitcoin, and with the advent of stable coins or dollar-pegged currencies that are built on top of public blockchain networks, we're seeing a lot of activity that is more transactional in nature, and it's changing really, really quickly.
When you see more corporate stories like we saw this week, MasterCard and BNY Mellon exploring ways to at least be able to process transactions, Tesla going further, actually buying Bitcoin, do you fear in any way that marks at least a short-term top in the price of Bitcoin?
No, I actually don't feel that way at all. As Elon Musk so famously said, in hindsight, it was inevitable. Look, at the end of the day, companies are in the business of making money. And I think, again, what Max Levchin said so well is if there's money to be made here, businesses have to pay attention. One really telling market event we'll have is Coinbase will IPO in the near future. It will be, when listed at its predicted $70 billion valuation, roughly the 7th largest bank in the United States by market capitalization, despite having a fraction of the assets under management of its peers in the traditional finance space. And there is a shift towards digital. Content is king, but distribution is queen, and she wears the pants. So it's all about distribution channels. And at the end of the day, the way that financial products are distributed is also changing really rapidly. Look at Robinhood, look at new fintech platforms, but also look at Amazon and Facebook and Google and Walmart getting into the game and distributing financial services. IKEA launching a credit card. I mean, it's not just limited to financial services. This is really about a fundamental shift in the way that products and services are being distributed, and Bitcoin and digital currencies, in my view, are a huge part of that story, and we're just now seeing the beginning of this story unfolding.
When it comes to companies, Meltem, I feel like we're talking about two different issues. There are those like Tesla that are actually converting cash into Bitcoin on the balance sheet, and then many others, accepting it as a service, which is a difference. I don't understand why a company would do the cash thing. I get the services. They want to participate in the growth and go where the consumer's going, and if there's interest, get in on it like PayPal. But why would they actually do that to their cash assets? I mean, wouldn't that be a huge risk?
So look, I was a corporate treasurer at ExxonMobil when it was still one of the largest companies in the world. And right now we're looking at 2.6% real inflation. Rates are at 0, and treasurers need effective portfolio diversifiers that are going to drive return. As they're looking at the universe of alternatives, there are a number of options out there, and Bitcoin is an attractive one. In addition, I think the question is, what will the multiple value accretion be for people who allocate their treasury assets to Bitcoin? In the case of MicroStrategy, that's a very extreme approach to allocating to Bitcoin, but the multiple is there, and that firm and its leadership has really benefited from that move. Same thing that we saw with Square. Tesla, the reaction was maybe not quite the same. But as we see more and more examples of different firms allocating their treasury assets to Bitcoin, the real question for me is, what does that mean? Does that have an impact on multiples that investors and allocators assign to these businesses? And if there's a positive effect there, I would expect that that strategy would be replicated across the entire S&P 500.
What happens if the price goes down? I mean, we saw it climb to record heights back in 2017, and then it crashed. So what happens to all of this discussion and adoption and all the things that you're trying to encourage and really believe in if we see that kind of volatility again?
That's such a great question, and one that we deal with a lot. I've been in this business for 6 years. At CoinShares, we have $4 billion in assets under management, and the cyclical nature of Bitcoin has been part of the story for some time. I think part of the conversation is around the cyclical sort of volatility of Bitcoin, which tends to operate in cycles like we see in any other asset. But if we look at the secular trend around Bitcoin and the supply and demand fundamentals in an environment where fiat currencies are being debased due to excessive QE, I think the cyclical trend may be volatile in the short to medium term, but the secular trend, which is really what we're looking at here, bodes very well for Bitcoin and gold, by the way, and other assets that are inherently deflationary in nature.
Meltem, thank you for joining us. Good luck with that weekend work watching Bitcoin.
I mean, markets that operate watching it these days. I mean, markets that operate 24/7, 365 are a new frontier. But in the age of all things digital, we are all online all the time, and I expect capital markets will be no different very soon, which is sad for us.
Yeah. Well, there's Forex, but it does close Friday afternoon. Thank you, Meltem. Good to see you.
Thank you.